I want to talk to you quickly about American Express versus Wells Fargo, especially when it comes to personal loans. Okay, not a lot of folks know that basically American Express actually issues personal loans too, and pretty, let's say, in a very relaxed manner. Okay, not really complicated. But Wells Fargo has been around for more than 100 years, and they offer personal loans. That's pretty good. So let me give you first a presentation before I'll speak about the pros and cons and the details for each personal loan. So if you think about American Express, think about a loan provider that's actually good for you. If you are an existing customer, okay, and you also have been like, let's say you have maintained a good standing. It's not just about being an existing customer, but it really helps if you have had a good standing on your credit card, on your American Express credit cards, but also if you have a banking relationship with a company. Yeah, American Express is actually a bank too. I mean, it's not your usual brick and mortar bank, but it's also a bank. It's an online bank primarily, okay, that offers us checking accounts, savings accounts, and what have you. So if you think about American Express, you are qualifying for a maximum of $40,000. In comparison, you are looking at Wells Fargo, you are going from 3,000 all the way to $100,000. I mean, Wells Fargo is one of the top 4 or 5 national banks in this country. Okay, in other words, it has branches in nearly every state, and so you can go to a branch, you can have a conversation. What I love about Wells Fargo, and what you will love also, is that you have the possibility to pre-qualify for a personal loan. So if you're looking to get a personal loan, you can actually go through a soft pull process where no credit score is being checked, no credit score has been pulled until you say, you know what, now I want to really go through the process. So when deciding between those two lenders, American Express and Wells Fargo, you got to focus on rates. You got to focus on loan amounts. You also have to think about the repayment window, because the Wells Fargo, for instance, gives you a maximum repayment window of 7 years, whereas for American Express you are looking at 5 years. So if you think about American Express versus Wells Fargo, let's talk about the selection here. So I want to first talk to you about American Express personal loans, and then I'll speak about brick and mortar branch. Okay, so something to really think about. So American Express provides loans for its cardholders. So you got to be an existing Amex cardholder. Okay, but that loan is only to consolidate credit card debt. You're not getting a loan to actually use to change stuff in your basement, or loans to finance your wedding. No, you are actually getting a loan from American Express to consolidate credit card debt. So American Express has loans that come with a very competitive starting annual percentage rate, but a relatively low maximum amount of 40 grand. So while American Express personal may be a good option for current cardholder, it's really quite inconvenient if you're not already one. In other words, if you don't have an MS card in your wallet right now, you can't qualify for a loan from that company. That's one. Number two, personal loans from American Express have a number of restrictions on how you can use the funds, including a ban on purchasing vehicles. So other personal loans give you more freedom in how you can use loan funds, right? So what are the pros and cons here? If you think about American Express personal loans, first of all, on the plus side, there are no upfront fees. Okay, you have a quick loan decision, and you have a fully online process. The reason why the loan decision is pretty quick is because Amex already has your data. They've had it for a while, so they know the kind of profile you have as a borrower. On the flip side, there is no in-person service. It's only available to cardholders, so you got to be a cardholder. I think I've said this before. And there is a high loan amount minimum. In other words, the loan amount minimum is 3,500, and so if you don't need that much, you could be frustrated. So it is what it is. Let's talk about Wells Fargo personal loans. So If you think about Wells Fargo personal loans, I want you to think about one of the major banks in the state. Okay, so you have Citi, Bank of America, J.P. Morgan Chase, or even like what's the next one? I'm blinking right now. But the point that I'm trying to make here is that Wells Fargo is a national bank. Okay, national bank. So you have the possibility to get things done faster. So they offer personal loans to current customers. If you have if you have had a Wells Fargo account for at least 12 months, you can apply online, by phone, or at a branch. This is really good because among the top four national banks in this country, Wells Fargo is the only one that still offers personal loans. Because Citi, oh sorry, it's not the only one. Wells Fargo and Citi, because Bank of America and Chase are no longer offering personal loans. Okay, so unlike many other lenders, including American Express, you may qualify for up to $100,000. And if you sign up for automatic payments with the qualifying accounts, you can secure a discount of 0.5%. So that's really good from a flexibility point of view, if you think about it that way. So, what are the pros and cons here? Let's quickly talk about that so we have a clear idea what's really happening in terms of loan amounts. Let's quickly talk about that. So, the pros: you have high loan amounts, you have flexible repayment terms. That's really good. So, the flexibility is pretty important. You have same day credit approvals. Okay, that's for the plus side. The minimum side, the minus side, you actually have loans that are only offered to current customers. So you got to have an existing relationship with Wells Fargo to qualify for their loan amounts. For the loan anyway. And also, there is no specified credit score minimum. So you need to really reach out to Wells Fargo to have a clear idea. But the cool thing is you have the possibility to pre-qualify. So you can see whether or not you would qualify for a loan. And also, Wells Fargo has only location in 37 states. So it is a national bank, but it's not covering all 50 states. So, but it's better than others anyway. So, how do you choose between American Express and Wells Fargo this year? Like, if you're thinking about Wells Fargo or personal loans or American Express personal loans, you first need to understand that those two lenders, both actually offer personal loan options to pre-existing customers, right? This means what? It means that if you're not a customer, you can't qualify in the first place. But this also limits eligibility because you got to be a part of you got to have a pre-existing relationship. Now, if you are looking to open an account with one over the other, both lenders have different strengths. So you want to choose, let's say, Wells Fargo for larger loans. Think about it, 3,000 all the way to $100,000. But you want to stick with the American Express if you want to score the lowest personal loan interest rates. So even though Wells Fargo is giving you a high loan amount, they're still charging you actually a high APR comparatively to other lenders in the industry. Okay, so that's an important element to think about. So think about the APR range here. So American Express and Wells Fargo have similar interest rates for borrowers. But one thing I have seen in my analysis is that American Express seems to be the winner here. Why? Because sorry, because American Express has a sorry about that. So American Express has a slightly lower minimum advertised APR of 6.90%. And the cool thing is that Wells Fargo maximum APR is 24.49%. So if you think about it, Wells Fargo has almost 5 points higher than you could qualify for with American Express. So that's something to really think about. Okay, so let me just repeat that just in case my voice didn't really come out naturally. So what I was trying to say here is that American Express has a slightly lower minimum advertised APR of 6.90%, whereas Wells Fargo is pretty higher. Okay. Now, one thing I want to say here is that if you really think about it, the loan you actually the loan APR you end up qualifying for will depend on your credit score, among other things. So let's talk about that. Your minimum credit score. So if you think about Wells Fargo versus American Express, unlike some lenders, American Express and Wells Fargo do not disclose minimum credit score requirements. So, in general, if you have good to excellent credit, you will qualify for the lowest rates anyway. So, that's something to really keep in mind. So, if you are trying to really decide between American Express and Wells Fargo, you also got to think about the repayment terms as well as the loan amounts. Now, the loan amounts, I've said this before, loan amounts, you can see that Wells Fargo is definitely the winner here. I mean, there's no, let's say, no comparison. When you really think about it. And one thing I want to say also is that you have to constantly think about what works for you and what doesn't work. So let me first talk about the loan amount. So loan amounts, Wells Fargo, $3,500 all the way to $100,000. This is kind of cool. If you remember, the thing is that I was really surprised during COVID. Even during COVID, Wells Fargo did not reduce their loan amounts. I mean, that was kind of crazy because a lot of banks over the country, a lot of banks were reducing their loan amounts, but Wells Fargo didn't touch their loan amounts. That was pretty strong from their part. I was surprised. Like during COVID, for instance, Truist, PNC, US Bank, and KeyBank, they all like reduced a little bit their loan amounts because the economy was a little shaky and people were really anxious and banks were really anxious too. But Wells Fargo did not change their loan amount, so that's kind of cool. 3,500 all the way to $100,000. What about American Express? Well, $3,000 to $40,000. Okay, 3,000 to 40,000. So think about if you need to borrow a lower amount, go for American Express. But if you need a larger amount, go for Wells Fargo. That's definitely the better. What about the repayment terms? Well, Wells Fargo offers slightly longer repayment terms than American Express, and that really makes sense. Why? Because the loan amounts are larger anyway. So if you have a larger loan amount, chances are you are going to require from your borrower a longer repayment window, right? So Wells Fargo offers slightly longer repayment terms. It could be really the best option for you if you are looking for potentially lower monthly payments. However, note that choosing a longer loan term usually means that you will be paying, in the end, more interest over the life of the loan. So just be careful about the repayment window that you are actually choosing. Let me talk to you about the fees here. So if you think about Wells Fargo versus American Express, you got to really, in terms of personal loans, you have to be like a little happy in the sense that neither lender charges origination fees, but you may have to pay a late fee if you miss a payment, and you do not want to miss a payment anyway. So while the late fee for Wells Fargo is not disclosed, American Express's late fee is $39. I mean, this is actually this is on the higher end for many lenders, but it's not an uncommon charge. This is a very good development. Why? Because if you were to go to other lenders, they'll probably charge you origination fees. They charge you administrative fees. They charge you paperwork fee, whatever. They charge you prepayment fees, all that kind of stuff. Now, I've said this before. I'll say this again. When you compare and contrast personal loans, you have to understand that you do not want to pay too much in fees. Otherwise, there's less money in your pocket. I mean, can you imagine you apply for $10,000 and you end up getting 8,000, even though you were paying interest on the you're paying interest on the 100 on the $10,000, as well as you have to repay the full $10,000. So that's important to really manage. I mean, from a cash flow perspective, to make sure that you're not paying too much money in terms of fees. Okay. One thing I want to say here is that the economy and also let's say events, trends in the industry usually might have things change. So, for instance, right now, Wells Fargo is not charging an origination fee, but this can change because we saw during COVID, for instance, going back to what I said a little earlier, a lot of banks have changed their terms and conditions. And some banks that did not actually charge origination fees, they started charging fees like overnight. So if you were to really go to such a bank and during COVID, for instance, you would have realized that, hey, listen, they're charging the fees, and they're not charging like low fees. They're charging pretty consequential fees. So the thing about the fee here is that it can change all the time. So please double check with the lender, and if necessary, get it in writing that they're not going to change the fees or charge you a fee over the life of the loan. So bottom line is, which is better here? If you think about American Express versus Wells Fargo personal loans, which should you go for? Well, basically, whether you choose American Express or Wells Fargo, the better choice largely depends on your desired loan amounts and the APR you'll receive, right? So if you want to borrow over $40,000, then Wells Fargo is definitely a better fit. However, if you don't need such a large loan and can secure a better rate with American Express, then it is the more attractive choice, okay? Either way, you will need an account to qualify for either lender. So basically, if you were to go with American Express, you need to really make sure that you have an American Express credit card. Okay, you qualify for such a card, which really will be a lot easier for you if you start by having a checking account relationship with them. Same thing for Wells Fargo. If you want to go, if you want to get a personal loan from them, you need to have a bank account with them also, and so that's an important element. Now, one thing I want to say here is that those two lenders might not be really interesting because of their strict eligibility criteria. You have other lenders out there who basically would qualify you without asking you to be a quote unquote a member. Like think about One Main Financial, or think about Avon, or think about Upstart, think about Upgrade, think about all those fintechs out there. Think about SoFi. Think about those fintechs that will really do business with you, like approve you for a loan without really, like making your life complicated. So you always want to compare lenders before applying. Okay, always. And if at all possible, you want to choose a lender that offers a pre-qualification route. In other words, a lender who will allow you to have a soft pull, go through a soft pull process, and then give you an offer based on the result of the soft pull. That way, you're not really jeopardizing your credit score over multiple loan applications. Always do that. And the cool thing is nowadays, a lot of banks, a lot of credit unions, a lot of online lenders, they do have soft pull processes that you can really go through before seeing how much you can qualify for. eh, Like ultimately. So the takeaway here is that in today's conversation, I explained to you American Express versus Wells Fargo. I give you the presentation, the selection, and now the takeaway. Thank you so much. God bless you. I will see you next time. Until then, remember, stay marvelous.